I remember a very specific conversation with one of my earliest mentors. When I was first getting into trading, I was telling him about my trading and my goals and my desires with trading. And he had a little smirk on his face and he chuckled a little bit. And he said, step number one is making money. And he said, that's the easy part. Making money is the easy part. He said, step number two is keeping the money you make. Now that's the difficult part. And at the time I was like, yep, whatever, doesn't really matter. All I wanted to do was make money and make as much money as I could. And it wasn't later on in my journey until I realized the importance of his message and the importance of keeping the money you make. There have been many instances in my trading journey where I've done very, very good on a particular day or week or month. And then the next day, week or month, I've given it all back. I also remember in early crypto bull runs, running small accounts up to high 5 figures, nearly 6 figures in capital, and then holding on to this greedy mindset and then losing all of it. So it wasn't until I got more experience in the markets, both actively trading and investing, that I realized the importance of his message. Step number one, making money, is really the easier of the two. It's the easier part. But really, a major key to wealth creation is keeping the money you make. Because it doesn't matter how much money you make, if you don't have proper systems, mindset, and structural systems to maintain that, you're going to give it all back to the market or you're going to blow it. So in this video, I'm going to show you not only how you can keep the trading profits you make and not give them back to the market, but also how you can hold on to them and continue to grow them and compound. Now, before we get into this, I want you to comment below your biggest trading psychology issue right now. I want to offer you some help. Now, traders are going to face this particular dilemma of making money and squandering it in two different places through their trading journey. Firstly, day to day, week to week, month to month. When you make profits from the market, you need a way to hold on to these and not give them back to the market. That's the first place you're going to face this particular challenge. The second place you're going to face it is when you bring money from your brokerage or from your prop firm, from your payouts or from your crypto investments or your stock investments or whatever it may be, and you put it into your bank account and you have that money there in your personal accounts. And what a lot of traders do is they spend that money or they blow that money, or out of guilt, they try and rescue people and save people. So firstly, I'm going to show you how you can keep the profits you make and not give them back to the market. And then secondly, I'm going to show you how you can structure your accounts and mindset and really your value system so that you don't blow the money that you end up putting into your bank account. Both are crucial if you want to continue to make money as a trader, hold on to it and scale it and grow your wealth. Now, the first thing I want to introduce you to is something in social psychology referred to as the self-licensing effect. And the best example of the self-licensing effect is in your health and fitness. Let's say, for example, you train every day and you stick to your workout plan and you're strict with your diet throughout the week, Monday, Tuesday, Wednesday, Thursday, Friday. The self-licensing effect says when you do something you're proud of, like sticking to your workout plan, you then give yourself permission to do something that you're ashamed of, like having a cheat meal and binge eating without guilt. And then what you're effectively doing is you're building all this progress throughout the week and then you're giving it all back. Because through the self-licensing effect, it says that whatever you do that you're proud of, you then give yourself permission and moral permission to do something you're ashamed of. Now, this is evident in your fitness journey. It's also very evident in your trading journey. If, for example, you consistently stick to your trading plan and you take win after win after win and you start to build up a little bit of pride and self-exaggeration and you think you're doing really well in your trading and you're really proud of your progress over that week and how much profit you've made in the market, guess what you start to do at the top of that pride cycle? You start to minimize the importance of your trading plan in your mind. You start to minimize the importance of your A-grade setups. You start to exaggerate your own abilities and intellect, and you start to minimize the risks in the market. And in your mind, you give yourself permission to take low quality setups and crap positions that you know deep down aren't part of your plan and don't really have an edge. But through the moral self-licensing effect, you give yourself permission to do so. So what happens is you do really well for a day or for a week or for a month, and you make a certain amount of profit, and then you take 3 to 4 low quality shitty setups and you give it all back. That's the cycle of most inconsistent and amateur traders. So this highlights the importance of reminding yourself of proven principles in the market. Firstly, you need to have a proven trading plan, a trading plan that's mechanical and that you trust, not just out of blind trust and faith, but because you've tested it and the data shows that it's profitable over a large sample space of data. You then need to develop a mindset that is able to self-equilibrate, meaning after you take wins, you become aware of the risks and drawbacks in real time. And you recognize that winning can oftentimes exaggerate you, take you away from the risks in the market, take you away from your proven setups and your trading plan, and make you take low quality setups. So when you take a win, you need to remind yourself of that you're more vulnerable in that state, and to manage yourself and to ground yourself. Because if you don't know how to ground yourself as a trader, you're going to get grounded and humbled by the market through losses. It's much cheaper to equilibrate yourself and humble yourself than let the market do it for you. And so too, if you take losses, you need to learn to bring yourself back up to a state of equilibrium so that on the next trade, you're not trading out of fear, but you're always listening to the market. And when the market presents an opportunity according to your trading plan, you execute. If you're going to get caught up in this idea of self-exaggeration and pride, you're going to be giving yourself moral permission to take low quality setups and take loss after loss after loss and give back all your profits that you're really proud of. So make sure you have a mechanical trading plan with a proven edge. Make sure you're using my Bulletproof Your Trading Mindset 2.0 tool before every trade. It's a completely free tool, link in the description. And this tool will make sure you're making decisions in alignment with your trading plan, not based on your emotions of fear and greed. That tool will help you overcome the self-licensing effect in real time because you're now sticking to your trading plan. And then the other practical thing you can do is you can continue to expand your vision for yourself as a trader. The only reason you're getting proud over 10K trades or 10K weeks or 10K months, because in your mind and in your environment around you, that's what is good relative to everybody else. But now if you go and put yourself in an environment where people are making, 100K a day or 100K a week, which I know there are traders and there are entrepreneurs and there are business owners that are doing those figures and way more, then all of a sudden you're no longer proud of your 10K day or week. You realize that you can do more and you can push yourself more. And that's not to shun or minimize a 10K day or week. That's an incredible accomplishment, but you can be grateful for that without exaggerating yourself and being incredibly proud of that, which is going to only attract being humbled. So my point here is if you expand your vision and you expand your environment and you start hanging out with people that are doing much better than you, you're less likely to get proud over a certain win or a certain accomplishment. You stay grounded. You're grateful for the accomplishment and win, but you stay grounded and you stick to your processes because you know that there's a bigger vision for yourself. You're just going to continue to push yourself to new levels and new heights and scale up more. Because this 10K day or week it's incredible by, the general standards in society, but you know that because of what you're doing as a trader and the skill you've developed, you can just leverage more and you can make more than that. So you're only going to get proud of an accomplishment if it's towards the edge of your vision for yourself. But now all of a sudden, if you expand your vision and you hang around people that are doing way better than you, then you're less likely to get proud over that one accomplishment. And then you're less likely to fall prey of the self-licensing effect. So make sure you have an edge, a mechanical trading plan. You're using my Bulletproof Your Trading Mindset tool to keep your mindset balanced and away from fear and greed. And then you know how to humble yourself after wins and lift yourself after losses. So you're sticking to your trading plan. You're not run by fear and greed. And then continue to expand your vision for yourself and continue to push yourself in terms of the environment and the people you're hanging around, so that you can continue to scale and leverage more and more capital so you can expand your trading. Again, it's okay to take a big win and be grateful for that and not self-exaggerate because you know there's still more to go. And that's really the mindset I encourage, rather than taking a win thinking you're better than everybody and self-exaggerating and then getting humbled by the market. It's much wiser to be grateful for the profits, but realize that relative to your capabilities and relative to the skills you have, what you've just accomplished is you just getting started. So this is how you avoid giving back profits on the day, the week, the month. Now, what about when you make that profit and you put it into your bank account or you get a payout? What about then? How can you stop yourself blowing it or giving it away or squandering it or trying to rescue people out of guilt? How can you manage your money wisely so that it continues to grow as opposed to making money, spending it, and then having nothing to show at the end of the month, the year, or your life? Well, really, this has to do with what you value. Every individual spends money according to what they value. If you perceive a certain outcome or a certain object or a certain thing as more valuable than cash form, the dollar, what's going to happen is the moment that money comes into your bank account, in your mind, you perceive more benefit over there. So you're going to go and take your dollar and exchange it for that thing you think is more valuable. So for example, if you have a high value on learning and education and personal development, which I'm assuming some of you do if you're watching this YouTube channel, the moment money comes in, you're going to go and spend it according to learning and education and developing your mindset and developing your trading and learning and absorbing as much information as you can because you perceive more value there than keeping cash in the bank. And then let's say, for example, you go and spend that money on a course or a mentorship or coaching, and that person who created that has a high value on health and fitness. They perceive more value in health and fitness and supplements and training and personal training and all that type of stuff than they do cash in the bank. What's going to happen is that your money is going to go into their bank account, and then that money is going to flow to a personal trainer who's going to go and train them because their dollar is better spent on health than cash in the bank, for example. Okay. So money flows from that to that. And then let's say, for example, that personal trainer has a very high value on lifestyle and looking good. And they perceive in their mind their dollar is better spent on a Lamborghini than cash in the bank. So the moment money comes into their bank account, enough of it, they're going to spend it on a Lamborghini, for example, because that they perceive that's going to elevate their lifestyle, what they value, and looking good better than having that cash in the bank, to a greater degree than having that cash in the bank. Now, let's say, for example, the owner of that Lamborghini dealership or that CEO, whatever, whoever makes the money, has an incredibly high value on wealth creation and saving a portion of their income and investing a portion of their income into income producing assets and then watching that grow and compound over time. Guess what happens? Money flows into their bank account and then it stops because they're putting money partly into savings and income producing assets and watching it grow. They perceive more value to doing that than spending it anywhere else. Now, obviously, they're going to have a percentage that's going to go to expenses, but most of their income is going to go into savings and investing, and it's just going to continue to compound. So money flows from those who value it least to those who value it most. And those who value it most, it stops there because they're putting their money to work in income producing assets. So if you're finding a lot of money come into your bank account and then leave your bank account the next week or month or year, whatever it may be, you want to track that money and find exactly where you're spending it. That's going to show you what you value. For example, is it going to a gym membership or food or personal training? That would indicate you have a high value on your health and fitness. Is it going towards clothing and makeup and looking pretty and going to the hairdresser and getting your nails done? That would give you an indication you have a high value on your image. Is it going towards your kids' education and food for your kids and clothes for your kids? It's an indication of a high value on family. If it's going towards coaching and mentorships and programs and that type of stuff, it's an indication you have a high value on learning. It's not until you have a high value on saving a portion of your income and then investing a portion of your income into income producing assets that money is going to stop. So if you want the money to stop and grow and compound, you need to raise the value and see the value in saving a portion of your income and then investing a portion of that income into income producing assets. And that way, the moment money comes into your bank account, yes, part of it's going to get spent on daily expenses, but then a portion of it's going to get saved into a bank account. And then once you have a cash savings and cash cushions, the rest is going to start to get invested into income producing assets. And then you're going to just want to watch that compound and grow because those income producing assets are generating a dividend, which you're just reinvesting and you're just watching that grow and grow and grow. And then eventually you have a big pot of money there. So the two ways to keep money is firstly, to manage your psychology so you don't give it back to the markets. And secondly, to structure your actual account structures, your savings and investings, and raise the value of those particular action steps so that when money comes into your bank account, it gets allocated to things that are going to ensure that it doesn't leave your bank account. And you need to have a higher value on saving a portion and investing a portion into income producing assets than anything else. Otherwise, the money is going to come in and it's going to flow to what you do value. Now, if you found this useful, make sure you like and subscribe. This keeps you up to date with all my recent releases. And before you click away, I want you to watch this video that's going to pop up on your screen. This is going to give you an in-depth explanation of your trading psychology and show you a very powerful principle that I created, I developed, and integrated into the Bulletproof Your Mindset tool. So you have a profound understanding of your psychology so you can stick to your trading plan, so you can scale up without emotional issues, and so that you can make more and more money from your trading stress-free.